Hi guys, welcome into this segment of market breakdown. So first off, before you guys already know the order of things on this channel. Before we go into the nitty-gritties for today's video, we're going to go over the previously analyzed pairs and we're going to talk about what the update has been like. But for this, I won't like the video to be too long, so I'm just going to say them instead of going through the charts. If you want more details on them, you can go through the previous videos and then listen. So recently we started a challenge here. So we started a challenge on the channel where I said we're going to be tailoring every of our trade into passing a Propfirm. So I bought an account for the challenge and now we've been able to pass the phase one. I posted on my Twitter account. So currently we've passed phase one and now we're on the phase two account. So I'm going to come on in this video. I'm going to be giving you guys the details of the trade cities that we're going to be using for the phase two again, and then when we're done with the phase two, hopefully these trade cities that we're going to be placing again goes our way. So I'm using the word hopefully because we don't control the market. However, all we just basically come to do is we look for the best opportunities that the market is presenting to us and then we capitalize on these opportunities. So the market is starting to give us opportunities again. It's been a while I came on here to actually drop a video, and that is because we had to give the market time, first of all, to give us profit from the from the opportunities it is that is giving us before, and also we have to give the market time again to form up some more opportunities that we can now capitalize on. And because we have that, now I'm back on your screen and we're going to be looking at three different pairs. Actually, I have much more than that on my list, which are good and solid trades, but so that the video won't be too lengthy, we're just going to be looking at three out of them. So there will be a link in the description to my free community. Do well to join my free community so that I can be able to follow through my live analysis as well. Sometimes it's more easier for me to just open my screen and then to just open my chatting device and come and analyze for you guys to see what the kind of trades it is I want to take next is going to be looking like, and then you guys can follow through with me when I'm trading during the week. So you can also with that being said, I'm going to be dropping the link to the listing in the description, the link to my community. I'm going to be dropping it in the description box, so just check it. You can join it and then we can always trade live together. So with that being said, I am going to give you guys a little time to let me just give you guys a few seconds to subscribe to the channel. If you're new to the channel, do well to hit the subscribe button so that we can get started. Do well to use the subscribe button. It's actually for your own good, so that you don't miss out on any good information it is I'm coming to drop on the channel for you guys. So okay, believing that's done already, so I'm not going to waste too much time. I'm just going to dive into what it is that we have for today. So today we're going to be looking at Euro USD, we're going to be looking at Ethereum, and we're going to be looking at one commodity pair, which is going to be sugar. So in the previous video we looked at sugar. It's gone to our TP already. We looked at Ethereum as well. It's gone to our first TP. It took us out for break even, which means we were able to at least extract something from the market. You guys already know TP1, we take out 50% of our position and then we move our stop loss to break even. Then the risk it is that we've removed from our trade, if we get another solid trade, it is that another quality trade. Yeah, that's the word. If we see another quality trade, we now do a transfer of risk while the position is still running. Then that risk, we take it away and then put it on another solid and on another quality trade, so that we can have multiple positions that is running, but then our risk is still going to be very well managed. So we're going to be starting with Euro USD. So you already know the order of things. We start from the monthly time frame. we're going to be starting from the monthly time frame. So let me just go to the monthly time frame, and then we're going to scale down to the weekly, to the daily, and then to the 4-hour time frame. So let me take out these tools so that you guys can be able to see very well the things it is that I have on my screen. You can be able to see the chart very well. I'm going to bring them back because we're going to be needing it for the for the analysis as we progress back to the lower time frames. But for now, as you guys already know, I pride myself in having a clean chart. So especially when it is that I'm teaching, I love my charts to look very appealing. Okay, so with that being done, I'm just going to bring you guys, I'm just going to make you guys see the whole of my screen so that I can be able to know what's been happening, what the trend been like. So now, from what we can see on Euro USD, if you bring out your trend line and then you draw it from the, if you bring out your trend line and then you draw it from here, you're going to see that Euro USD has pretty much been in a downtrend ever since the year 2008. It's pretty much been in the downtrend. Does this mean Euro USD has never gone up? No, but it's been trading below this trend line. That's basically the word for it. That's basically what I mean by it's been in a downtrend. We've seen subsequent pullbacks, but everything that has been happening, all the bullish move and everything that has been happening, is still below this trend line. So we can say Euro USD has been trending down ever since 2008. Euro USD has been trending down ever since 2008. Now, we've seen a first touch, we saw a third touch. This actually came shy of the trend line, but you can decide to call it I won't really call it a third touch actually. But then when the market actually came here, and this is looking like, first off, in the past, okay, I didn't get to talk of this thing. I didn't get to later talk of the results from our previously analyzed pairs. So let me take a pause and then talk on that. Then we'll come back into what it is that we have for today. So in a previously analyzed pairs, in the previous videos that we did, we looked at GBPNZD, which we were able to make something from, but not so much. I did a live session on it where I had to tell the guys on there to close the trade, because while we were holding the buy setup, I saw a head and shoulder pattern formed on the 4-hour time frame, which was a big red flag for this thing, which was an indication for the bullish momentum becoming over. So we had to close out in the little profit it is that we've been able to make from the market. And also, so we were able to make something from that, and then we moved to GBP USD. We were able to make our full TP on it. We moved to Adobe stock. We were able to make TP1. We moved to which other one, Ethereum. We were able to make this thing, and for BTC we were able to get our entry at 63,000 plus. I can't remember the exact figure, and then we closed it out at 83,500. If you can check the previous video, you're going to see it. And also, if you were following me back to back on either on any of my social media platforms, and most especially my Telegram channel, my Telegram community, you would have been able to notice that you would see me come on there time to time, and then I showed you guys what it is, how we're going to be adding the position, how we're going to be maximizing every move it is that was happening in the market. So next up, we moved into, I think that's pretty much everything. I think that's all. I think that's all. So okay, yeah, for Euro USD as well, we saw, yeah, I knew I was missing one. For Euro USD, this was for us at the time looking like a potential inverse head and shoulder pattern, with this being the shoulder, this being the head, and then this being the shoulder again. So I was calling buys on Euro USD. However, we didn't even get the we didn't get the entry criteria. We didn't get the our entry criteria didn't get fulfilled. But assuming we were able to get an entry on it, we would have been stopped out here for break even, which means we would have taken out our I would have taken out our TP1 here at this region, and then would have moved stop loss to break even, so that even when the market eventually now decides that this inverse head and shoulder pattern that formed above on this major zone is no longer going to be holding, we would have still be able to make something from the market. But then we had to let the whole thing go because we didn't get the entry criteria that we were looking for. The market didn't give that to us, so we had to let it go. So after the market got here, which was supposed to be our first level target, the market immediately turned into a morning star again, which signified a move to the downside. And remember, like I said earlier, the market has been trending down ever since 2008. My whole thought was that Euro USD was going to start buying from here, and then we're eventually going to break above this trend line, and then we're going to start adding more position at where this arrow starts from. If you check the previous video, you're going to see more detail on that. But the market came here, formed an evening star, and then started moving back to the downside. Now we've been able to see that the market is still bearish. And also, again, if you bring out your Fibonacci from here to here, if you bring out your Fibonacci from swing low to swing high, you're going to see that from swing low to swing high to swing high, if you bring out your Fibonacci from swing low to swing high, you're going to see that the market actually, all the market was trying to do is just to come from somewhat of a double top inside of this Fibonacci, which signified a push back to the downside again. So the trend line is pushing it to the downside. We have a candlestick pattern, which is an evening star pushing it to the downside, and also we have a Fibonacci pushing it to the downside again. And also, if you look at here, this is looking like a top, this is looking like a top. So we have this double top. Within this double top, another slight double top even formed here, but let's just consider this big one. So we have this double top, and then this market actually rallied back into the neckline, did somewhat of a faked out again, and but then this double top was able to overpower it, and then we're now starting to see the bearish momentum come into play. So with that being said, I'm going to move to the weekly time frame now and show us what it is that the market is trying to show us again. So which means everything it is that Euro USD is trying to tell us, we've been able to make money like from other pairs. Euro USD didn't give us the Euro USD didn't fulfill the exact criteria that we wanted to see, so we had to let it go. But now that it's beginning to show us more opportunity, we are going to capitalize on it when it's mature, when it's very well set, and then we can now possibly make money from it again. We will now make money from Euro USD again. So now let me just go to the weekly time. Okay, first of all, let me bring back my tool. Shift F. Let me bring back my tools. You guys already know it's quality trade, risk management, and trade management. That's basically our whole focus on this channel here. We want to focus on the best trades it is that we can see, and the best of the best trades that the market is showing us, and then we look out for, we make sure we manage our risk on the quality trades, because you have a quality trade doesn't mean the market can decide not to do its thing. The market will still do what it wants to do. The market can still decide to do anything it is that it wants to do. But then because you're going for the best trades, you've already brought yourself into this, you've already been able to create a room of consistent profitability for yourself, because you're waiting on the best of the best setup in the market. Now, because you're waiting on the best setups in the market, you don't know if the first trade you're going to be taking, because I have this thing where I tell myself that it's not even like, I don't think it's possible, it's not even possible yet that we say I want to take a trade, and then if I'm taking 10 trades, for example, now we will now have maybe up to 6 or like 6 trades, that 4 trades that is going to be a loss amongst this in highest trades that I've been able to, like, I've been able to check my journal, I've been able to check every of my trades back to back, my trade history and everything, and I've seen that highest loss that I can be able to, like, that I've ever made in a row for some time now. Let me not say ever, yeah. For some time now, that I've made for some time now, is been 3 trades, like, losses in a row, and then at the end of the day, the rest of the 7 is going to come cover up for it. So you don't know if the first 3 are going to be the one that is going to be losing trade. You don't know if the last 3 is going to be the one. You don't know if it's going to be in the middle this thing, or you don't know if it's going to be scattered all around. So the best way you can be able to give yourself room so that you can always come back, I see traders saying stuff like, how do I handle losses? The truth is, you don't handle losses, you can only prepare for it in trading. Losses is not something that you handle, losses is something that you prepare for. So the best thing you can do is to manage your risk so that you can provide room for yourself to come back again to take another quality trade, and then you apply your trade management. You apply your trade management for every trade it is that shows up. The things it is that you've planned that you're going to be doing in the trade, you apply it, and then you're going to see that overall you're going to start having the consistency it is that you've been trying to get in a very long time. So on the weekly time frame, now we're seeing this double top. Or let me even go over the reason why I wanted to take the buy the other time, in the previous distance. So like I said, this was looking like the shoulder. Then on the monthly time frame, these two together was looking like the shoulder, and also it was looking like, on the monthly time frame, it was looking like the shoulder. Now on the weekly time frame, is looking like a double bottom. So simple, like the simple thing to do, or the ideal thing to do rather, whenever it is that you've seen a chart pattern, is you want to wait for it to break the neckline, pull back to it, and then it is until you now see a break back above a CTL formation that you now want to say, okay, I want to start jumping into this trade for possible buys or possible sells, depending on the chart pattern it is that you've seen. If you see in a chart pattern that indicates sell, you want to wait for your selling, you want to wait for that selling opportunity to fully materialize. And then if you are waiting on a chart pattern that says buy, you want to wait for that buying opportunity to fully materialize, or that confirmation it is rather. You can call it confirmation, you can, whichever word it is that you choose to use. So now we're waiting for a breakout, pullback, and then continuation. And then I saw this bearish candle. I was like, okay, the market's starting to pull back. Got here and then started moving to the upside. And this is looking like the 32 fib level. I don't trade based on that. I only trade based on 50 fib and 0.618. These are the Fibonacci levels that I know gives consistency, like a much more consistent result. So you don't want to start jumping into every trade it is that show up. You want to make sure that you stick to those things that gives much more consistent results. So that is why I didn't take this trade. I was very much adamant that until the market comes here and then gives me a break back above a possible CTL that might form, I am not going to be jumping into it. So I didn't see that. We have to let the trade go, and then it came to the 100 level retracement, which is here, formed a double top, and now the market is starting to trend to the downside. So we didn't get the buy, but now there's a possibility we might get the sell. So this double bottom now that we've seen here, all we're basically waiting for is a pullback to the 50 fib of anywhere between here to here, because on the daily time frame you're going to notice this is a significant, like this is a significant high to low here. So I'm going to be waiting for a pullback into here, or a pullback into here. This here, I'm going to be waiting for a pullback into this third touch of this trend line before I now start selling. Now let me take you guys to the daily time frame so you can very well understand why it's going to be here, why my pullback is going to be into here and not this yellow zone. I'm going to be waiting for it here, because this yellow zone is very, like, it's been acting on it ever since, like it's been acting on the market ever since, but I'm going to be waiting for a pullback into this trend line instead. Now, how are we able to like get this trend line? It's not showing very well on the weekly time frame, but let's go to the daily time frame and see if it's more visible, and like why did I even draw this trend line in the first place. And then we can now see very well how it is that we're going to be waiting for it and how we're going to be trading it. So if you're watching this and you're yet to click this thing, if you're yet to join my free community, do well to go to the description box. You're going to see the link to my free community there. You can just join and then we can trade together consistently in this thing. Also, my free community is not just a place where I drop trade ideas and all that. I also drop opportunities that are happening generally in the financial market space. And what I mean by that is I sometimes drop opportunities for people that are into crypto, so that you can be able to see any place. If I get an opportunity about any crypto job whatsoever, I come on there and I drop it. I don't really do much of crypto jobs. I do other things in crypto space as well, but not really the job stuff like that. But if I get any opportunity, I do well to come there and drop it. So you want to make sure you stay on the channel consistently so that you look out for any opportunities that I'm dropping, so that you can be able to grab it on time before someone else grabs it. So yeah, we have this. I was able to draw this trend line because of this. Now, as you can see, the market already reacted to this yellow zone, so it broke it because of how significant this yellow zone is. You remember this yellow zone was the one I said I was going to be waiting for a pullback into when it broke above here, but the market instead came into here and then moved back to the upside before we now have this double top. Is even showing very well on the daily time frame. So now we have this broke here, pulled back into this place. So now we're having this as a first touch of the trend line, we're having this as a second touch of the trend line. Now we're having this as a possible touch of the third touch of the trend line. And one thing about the touch of the trend line is it usually moves very like it moves massively than the first and than the second touch of the trend line. So if I'm able to get my entry from here, so now basically what I'm looking at is, since the last day, which was Friday, the last day of last week, candle actually closed as an inverted hammer. So what I'm going to be waiting for is, and that inverted hammer simply signifies a possible, note the word possible, the market can decide to continue going down. But if this happens, which is if I see a move from here into this 50 pip, which is where I'm going to be waiting for a pullback into, and then I'm able to draw a CTL from here to here, and then I now see a break back below the CTL, I'm going to be picking my entries. My stop loss is going to be coming above the previous high, wherever it is that it forms, or above this Fibonacci. First level target is going to be here, which is going to be 100 level retracement. I'm going to be taking out 50% of my position here. 50% of my position I'm going to be taking out here, and then I'm going to be moving my stop loss to break even. I'm going to be moving my stop loss to break even, making Euro USD become risk free, and then I can now transfer my risk to another setup it is that potentially shows up. So basically that's how I'm going to be getting into Euro USD. Pull back into here, break down below CTL, stop loss above previous high, wherever it is that it forms, entry below the close of this one, what's it called, CTL, first level target here, and then my overall level target here is where the juicy part is. My overall level target is now going to be here. It's going to be here at the monthly target. That's where my overall level target is going to be. Now if the market comes, if it breaks back down below here, and then I see a pullback into here again, and then I'm able to draw a CTL, and then I see a continuation below the CTL again, I am going to be adding more position, which means even though I'm unable to get any other trade on any pair, for example, let's say I'm unable to get any other trade on any pair, for example, the risk I removed there, I'm going to be bringing it back here. So like I'm going to be having multiple positions, either on one pair or on several different pairs that shows up. I'm going to be having multiple positions running in profit, whichever way in profit. If it continues to go in profit, I'm going to be adding much more position, but I'm going to be making sure the previous position is already risk free. This way I can be able to like maximize every move it is that happens in the market with a risk well managed. My risk is going to be well managed, number one. Number two, I'm going to be able to like milk everything it is that the market, every opportunity it is that the market is giving me. So a pullback into here, break below CTL, first level target, overall level target. So this is close to like 1,200 or 300 pip from here. So I'm going to be, like I said, first level target, second at this second zone here, a pullback into here, probably another break below CTL. I'm going to be picking another entry again, first level target for that one here. If this is where it gets to before it start pulling back, wherever it is that it gets to before it start pulling back, will be my first level target again. I'm going to be removing 50% of my position again. Like I will bank something from whichever thing it is that the market has given me. I will secure it and then put it into my account, move stop loss to break even again, then I'll start holding it until holding it. If I get more position to add again, I'll keep on adding until it gets to my overall level target, which is going to be 0.970000. So that is that for Euro USD. Entry here, first level target here, overall level target here. So we're going to be coming now to Ethereum USDT. I'm going to be starting this, or okay, let me even start from the monthly time frame. So if you look at this very well, if you draw your Fibonacci from here, let me bring out my Fibonacci tool. So that is that for Euro USD. So Ethereum, bring out your Fibonacci. Didn't I pick it? Sorry, I don't know. I think is it acting up? Sorry guys, I don't know. Let me check. I don't know if it's network issue or what exactly. It's just starting to act somehow. Okay, so I can use that to remind you guys, if you are yet to subscribe to the channel, do well to subscribe. Do well to subscribe. Do well to hit the subscribe button. Do well to hit the subscribe button. Also, you can follow through with this if you can also follow through with us on your prop account. You can follow through with us on your prop account. If you join the channel, you'll be able to like understand in details when exactly it is, because every time it is I want to enter into this trade, I come on the I come on the channel and I drop, I don't know, I think it's network. So I come on the channel and I drop the I come on the channel and I drop the trade setup. That's okay. I'm now going into the trade it is I analyzed on the YouTube channel, which is for example the way I analyze Euro USD. Now I go on the channel and then I drop the exact setup. That okay, now is the time for me to go into now is the time for me to go into the trade, because I've seen an entry that I spoke of, or if I see any new developments that makes it look like I'm going to tweak my entry a little bit, I tell them, and then we go into it together, we'll make money together, and then we'll move into another pair it is that we analyzed again. So for the first one, let me check. I don't know why. Let me just check this tab. Okay, maybe I'm going to start with this and why I allow Ethereum USD to load fully. I don't know why, but I'm just going to like start with this tab with you guys. So the previous, what's it called, the previous phase, which was phase one of the account, we used, okay, yeah, I even have a giveaway that I'm going to be doing with you guys, but let me talk on this fully, then I'm going to share it with you guys. So the previous trade we took, first off, AUDJPY went to a loss. We took crude oil, went to a loss. Yeah, that was it's also in the previous video as well. So we took BTC and we took GBPNZD and CAD JPY. That was what pretty much CAD JPY and GBPNZD brought the account back to break even for us, and BTC USD was able to like pass the account for us. So what I'm basically risking per trade is 1% of the entire prop account. I'm not saying you should risk 1% of your account, because I am so much certain of what my win rate is like. That is why I can risk as high as 1%. I know people that risk 0.5% and everything like that, and that's working for them consistently. So you don't have to like risk as much as I'm doing if you know your win rate isn't so great. So with that being said, let's continue with this thing. Okay, the giveaway, I said when we're done with the account, and I have seen the active participation on the in the channel, in the free community, I'm going to like I'm going to like check very well for the active members in the community, people that join the live sessions I'm going to be doing, because I do, like I've said, I do subsequent live sessions apart from just coming on YouTube here to make a video and come to drop for you guys. So I do active live sessions and everything. So if I'm going to try as much as possible to like look out for people that are active on my sessions in the community and also on my social media platforms, and I'm going to like buy more accounts from the profits of the accounts we're making from the trades we're going to be taking on the channels and everything, and then the account is going to be given away to, what's it called, is going to be given away to the people that are following me actively and that are participating, that are engaging in my post and everything. So now for sugar, we're going to be starting from here. I hope this one is loading already. So from sugar, if it doesn't load, that means we're just going to like leave it, and maybe we're just going to like stop in here with sugar and everything, which is going to be the last one we're going to be treating in this video then. But if you, okay, yeah, I even did a video on it already on my channel, but if you come join the channel again, maybe when I want to pick the entry, I might still do a session on it already again. So for sugar, this is the weekly time frame, and then like the market has been trending down ever since 2003 November. The market has been trending down. Now September 2023 we saw August 2023 we saw a break out of the trend line, and then we saw a slight pullback to it. If you draw a Fibonacci here, if you come to daily time frame and then you draw a Fibonacci from swing low to swing high, you're going to see that after the market broke back above the trend line, it pulled back into the 50 fib, exactly between the 50 and 0.618 region. That is where the market pulled back to. And remember what I said about Fibonacci, I don't use any of that Fibonacci level apart from 50 fib, which is where I'm going to be expecting the market to pull back into, and then I take out something at the 100 level retracement, and then if the market has not traded around the region it is I'm trading to before, I'm going to use my fib extension, which is going to be minus 0.227 extension, to be taking out my overall profit. So we're able to get a buy here. We're able to get a buy at the close, 4-hour close, back above the DC. I'm just doing a rough example of how we were able to get into this previous trade on the weekly time frame, but we're still going to like come back into the new opportunity now. So we saw a 4-hour candle close. Don't worry, the gap between here and here is actually very, very significant. So we saw a 4-hour candle close above above the CTL. We picked the buy, first level target at this 100 level retracement, and then overall level target came here on this weekly time frame. So we're able to hold this like that and everything. So now we're seeing this as a double bottom. We're seeing this as a double bottom, And for a double bottom, remember what I said, whenever it is that it breaks, we're going to be expecting the pullback to the neckline, or even though it's not going to come into the neckline, sometimes it's going to at least come into the 50 fib. Most of the time the neckline and the 50 fib usually matches sometimes, but in this case the Fibonacci that we drew was on the daily time frame, which came from here. If we go to the daily time frame, we're going to see it very well. So it came from here, we drew the Fibonacci from here to from swing low here to swing high, and then we saw this as a 50 fib. So all I simply did was bring out these two to like represent it, and then remove the Fibonacci. Like I said, I don't like my charts being rough, and Fibonacci has a lot of lines, so I just brought this out. And then all I said was told the guy in the community that we were going to be waiting for a pullback into this zone. We're going to be waiting for a pullback into the zone. Now we've gotten the pullback, and this is looking like a what's it called, this is looking like a hammer. This candlestick pattern is looking like a hammer. So all I'm basically waiting for is when this market now has pulled back into this 50 Fibonacci on the daily time frame, we're going to see that this is a good, like it's a solid flag pattern. All I'm going to be saying to myself is immediately I get a 4-hour candle close analysis on monthly, weekly, you're going to be waiting for a pullback on daily time frame, or you can even wait for a pullback on 4-hour time frame. So if you get a 4-hour candle close back above or below the CTL, depending on the direction it is that you want to trade to, then you can now pick your entry. So my first level target is going to be here. My first level target is going to be here, and possibly if I see that the market looks like it wants to start extending from here, I'm going to start looking at like the market behavior. I'm going to make sure I open some positions. If I start looking at the market behavior and I see that it wants to extend, then I'm going to come and then put a zone here. I'm going to come and then I'm going to put a zone here, right here, and then I'm going to say to myself that this point is going to be my overall level target here. So I'm going to be picking first TP here, and then I'm going to be taking my overall level target. I'm going to be taking it here. I'm going to be taking my overall level target here. So that is that for sugar. All I'm going to be doing is like close this in. So there is this it's not a broker. There's exchange that I trade with on my personal account. There's this exchange that I trade with on my personal account. It allows me to trade sugar, that's commodities. You can even trade soybeans, you can trade live cattle and some other things. Yeah, I trade WordPress. Like the thing is just understand how to trade immediately. Like once you can actually understand how to trade, anything that has candlesticks that comes before you'll be able to like make money from it. So basically that's how it is for me. So there's this exchange that allows me to trade almost every kind of, like all the kind of pairs it is I want to trade, both forex pairs, crypto pairs, commodities, stocks has been delisted from from the app, but there was stocks there before. That was how we were able to trade our Tesla stock, Adobe stock, and the rest of the stocks it is have been coming on here to analyze for you guys. But now for here, all I'm just going to be waiting for is a 4-hour candle close above this zone. Let me come to the daily time frame so that you can very well understand what it is that I'm trying to show you. Coming. So okay, so you can see that the flag pattern is pretty much showing very well. So all I'm just going to be saying, the market has pulled back into the 50 fib. Let me bring out my Fibonacci Android so that you can see well the things I was trying to explain. I'm coming. Let me take this out. Okay, so now I bring it back, bring out my Fibonacci, and then you draw it from swing low to swing high. So as you can see, the market came into the 50 fib. Now it's starting to look like the 50 fib is going to hold it to the upside. Now all I'm going to do is wait for a 4-hour candle close back above here. Let me take out the Fibonacci back again so that my chart is not looking too rough. So I'm going to be waiting for a 4-hour candle close here. I'm going to be waiting for a 4-hour candle close here. First level target is going to come here. First level, when I saw this close above this 50 fib, I told you guys you can even, like, you can, it's with a chart, so you can go through the chart on the free community and you're going to see it. I told you guys, like, this, it has closed above here, but don't trade it, like, don't buy. Like, there's no zone that is actually holding it to the upside. There's no major level, there's no minor level, there's no Fibonacci holding it back to the upside. From, like, it didn't actually pull back into any significant zone before it came to break back above here. So I could actually tell that this was actually a fake out. So we had to, like, wait more for the market to come into the 50 fib. Now that the 50 fib is starting to hold, I'm going to wait for you for 4-hour candle close back above the city, above this flag pattern. First level target here, overall level target is going to come here. Overall level target is going to come here. So basically that's how it is. We're going to be taking our opportunity for this thing, for sugar. So let me see if I don't know, Ethereum is still not loading. The tab is still not loading, so it's like we're going to, okay, let me see if I like to, okay, so yeah, it's like we're going to be, okay, so for Ethereum, we're able to pick our buys from here. Actually, we entered Ethereum on the light phase already. We're able to, on the second phase already, yeah. We're able to pick our buys from here, got to TP1, came back to stop us out for break even after we took out something from the markets. Now it's gone, just like rallied up to the upside. There's no need for us to be paying or anything. We're going to, all this impulsive move is eventually going to bring all a resultant move to the Fibonacci region, which I marked out here. So all I'm going to be waiting for Ethereum is now that we've seen a rally to the upside, I'm just waiting for a Fibonacci pullback into the Fibonacci. Then I'm going to draw my CTL, and then a 4-hour candle close back above the CTL. I'm going to be picking a buys. First level target is going to be coming here, and then my overall level target is going to be coming here. Here is where the Fibonacci is. Immediately I see a break back above a CTL that it allows me draw. I think if you even come on the 4-hour time frame, so I might not be doing much this thing. I don't think I'll be going to the weekly time frame and start doing a full analysis on Ethereum, because I've actually spent a lot of time on this video already and I don't want it to be too long. So I'm just going to tell you guys what the entry is going to be like. But if you guys join the community, like I've been saying, you're going to be getting a full details on how it is that we're going to be taking our trade. So this is it. I'm going to be waiting for this CTL to continue holding. So as long as this CTL starts to hold, this counter trend line, as long as it continues to hold and then the market trades below it, there's no, even if it decides to break back above it now, I'm still not going to be buying. The point is, until it comes into this 50 Fibonacci, there is no buys. I'm not seeing any buys. All these points are not, there is nothing here to hold it. So why will you say you want to just come here to this point and then you want to start buying? It's if the market can decide to come here and then start buying, well, that means the trade is actually not for me. The people that can be able to catch this trade and then be able to make money off it, let them make money off it. Yeah. But my own consistency rule is that I want to wait for pullback into Fibonacci when I've been able to see a trend, when I've been able to see that the market is starting to trend up. I want to just see a pullback to the downside, which is going to come into Fibonacci, then a break back above a CTL, then I'll jump into buys. If I see that the market is trending down, I'll wait for a pullback to the upside, which is going to come into a Fibonacci region. And then when I see that the market has now broken back below the possible CTL that allows me to draw, then I'm now going to say to myself that okay, now I have an opportunity to do what, to sell. And now I'm going to start to, that is when I'm now going to start to capitalize on the opportunities that it is that the market is showing me. The Fibonacci 2 is a very, very strong and significant zone, especially when the pullbacks you're waiting for is actually happening into the 50 fib. So basically that is what I am going to be waiting for on what's it called? That is what I am going to be waiting for on Ethereum. A pullback into this region, which is around 2,900 $2,900 per coin. So you pull back into it and then a break back above here. First level target is going to be here. Then overall level target is going to be at 3,500 thereabout, or $4,000, depending on the market behavior here. I might just like maybe close. If I've closed maybe 50% here, I might just maybe close 30% here and then hold the rest for a more move to the upside. So that is that for that on this. Segment of market breakdown. However, before we close, I am going to like maybe just do a review and talk about some things. But first, let me talk about the things I want to talk about. So I am going to be dropping the link to this thing, the link to my trading platform, to the exchange I trade with. I'm going to be dropping it in the description, also alongside the link to my free community. Also, I'm going to be dropping it in the chat box, and I'm going to pin it there so that you can easily find it. Just hit the link, sign up for the trading this thing, and then come on the free community. We can always trade together. Also, I will still be coming here like I've been doing time to time. All my trades since the beginning of the year has been documented on YouTube, or has been documented here on YouTube. As you can see, it's not about taking so much trade for you to be consistent. It's about taking just the quality ones, managing your risk on them, and then managing your trade as you've planned on them. And then you're going to see that you're going to grow consistently. You're going to be able to grow your account, and then you'll be able to like scale up, get more funding, and then scale up. The account I got for this one we're doing is just like an experiment, so that you guys can be able to see how it is that you progressively you can be able to do things, you can be able to get things done. So like follow through with this, and then you're going to see that you're much more consistent with your profitability, and then before you know, you've actually scaled up and then become one of the traders that are balling yourself. So I'm going to be putting the description to the exchange there. Also, if you want to learn how to trade for yourself, and then you want to learn it firsthand how to trade, you can come onto Exodus Institute. Now this is the YouTube platform where I can be able to come and share as much as I can share on my free community here. I can be able to come here and then share it with you guys. But if you want a much more exclusive knowledge on how to trade, you would have to sign up to the institute, to the actual institute. So you can go on the Telegram platform, text the admin on the text the admin on the free community. You can text the admin on the free community. You can text me, or you can either reach me on IG, you can reach me on my Twitter page, or you can reach me on any of my social media platforms. Just give me a text, then you like tell me what it is that you're here for, maybe to sign up for sign up to the institute, and then someone is going to attend to you and then sign you up, and then basically the current fee to join isn't so great for now. Is not like, it's not something very very big. It's just $50 to join the institute. So you join the institute. Also, if you want to learn another online skill apart from this thing, Exodus Institute is actually not just a institute that offers teaching on trading alone. It's also an institute that teaches UI UX, graphic design, basically any online skill it is that you can think of. Sorry, the video is getting very long, so I'm becoming tired. That's why I'm starting to say starting to muffle some things up. So any online skill it is that you want to actually learn, you can come on there, and then you see there are different tutors in the institutes that are going to like walk you through how it is that this, and they are going to put you in a community where you can be able to like interact with the rest of the students that have like signed up before you, or that are going to sign up after you, and then you can share your ideas and then grow very well in your field of interest, be it graphic design, be it UI UX, be it programming and some other stuff like that, and then you can grow and then become a better trader for yourself, become a better trader for yourself, and then constantly make money from your field. So basically that is that on that for USD, Euro USD, Ethereum, and Sugar. So basically that's that. So okay guys, thank you for tuning into this channel again, and I believe you've subscribed. So that will be that on that for this video. So au revoir, bye guys, peace out.